Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thanks for having me.
Wow, 10 years in the making. Bitcoin ETFs approved. If you're listening to this on Thursday, January 11th, they launch today at 9:30 a.m. for trading. Was it a sell the news event? I didn't. We're over my shoulder. I mean, we're recording what's Wednesday night. It's flat.
It's flat. Yeah, I would just say there's a lot of uncertainty surrounding day one flows with respect to will inflows outpace outflows of things like, Grayscale.
Right.
There's $28 billion of Grayscale that's been in, probably on average at a much lower cost basis than here. The discount is likely to close. I mean, it gapped, higher, at the close today.
Right.
And so the question on the approval, and there's been a lot of folks, waiting to, take profit on Bitcoin, waiting for this ETF news. And so, I think it's possible that you go down, but I think it's likely that you go up. And this is an asset that's asymmetric to the upside in terms of, its risk profile.
Yeah.
And, you can go to zero, but you could also go to like 200,000, right?
Right.
So, you can at most lose 100%.
Right. But I don't think you could go to zero.
No,
I think
you're
we proved
not.
that. Like, we didn't go last year.
And if you're thinking about Bitcoin as an asset that's floored at now, let's say 30, 35K, and you're trading at 46, and you think that, there's a positive supply catalyst coming with the halvening, turn and Fed policy, et cetera.
Right.
You could be looking at an asset that could easily be worth 100K.
I think that's within
the
range.
year. And
yeah.
so if you're talking about an asset that's got a downside of 10,000 versus an upside of 54,000, that seems like, good 5-to-1 risk reward trade right there. And it's now going to become in a form that's incredibly easy to access.
So easy.
And, just for what it's worth, like, you're going to be able to get margin on it, day one for the most part.
Right.
And so there's going to be a lot of like cheap money that's going to flow into crypto as a function of folks getting financing on a lot of these ETF products. And so there's a lot of cash coming in, a lot of new institutions that now have access to it, millions and millions, tens of millions of retirement accounts and other investment vehicles that will now have cheap access to Bitcoin. And so I think the potential is not infinite, but, to the moon does come to mind. Let's put it that way.
Yeah, well, you heard the intro rap. We had JFK, former president, talking about going to the moon. There was a reason for that choice.
In that vein, it is not what Bitcoin can do for crypto, but it is what you can do for crypto. I don't know. I just tried to make something cool there. But I just do want to highlight the fact that alts are ripping higher on the back of this announcement. Right. We've had ETH, trade up to, 2,500 and change.
Let's talk about ETH real quick.
Have outperformed a ton as well.
I've been very critical of the ETH BTC rally we've seen over the last couple days. Our clients and counterparties will know that. I've tweeted about it before as well. I'm of the belief that ETH BTC should go lower before it eventually maybe goes higher. You do have ETH ETF applications that have been filed. I think the earliest final approved deny date on their 19B4s is in May. The logic being from the prospective issuers that they also have CME futures, and so futures like spot. You look at the Grayscale ruling, right? That it should be a similar analysis ultimately from the SEC, but that's a long ways away. That's 5 months from now.
Yeah, I just look at it from the positioning standpoint. Everybody's positioned in Bitcoin and not really that positioned for ETH upside.
So there's a catch-up trade
there.
There's
a catch-up trade. And it's also just like, folks looking to take profit on Bitcoin, like what's the next available trade? Right. You look at a cross that's down over 20% on the year.
I'm of a view that I agree with that. But I think going forward where we believe a lot of allocation in Bitcoin will be through these ETF vehicles, that inter-crypto cyclicality should dampen, particularly before the ETH ETF launches, right? Because if we believe there's a lot of financial advisor allocation coming, which is the target audience for these ETFs, we've read a report. We believe that. I believe that. That's not sitting on, Polo or a crypto exchange ready to go into ETH and then into alts, right? It's stuck in the ETFs. So the rotation trade, I think it can still happen now because the money's not in the ETFs yet as we record this, certainly. like this time there's still that rotation. You can see it happening. I mean, yesterday when the fake or compromised tweet came out from the SEC, there was a rotation into ETH overnight. Like there was a notable one. But that should dampen over time, in my opinion, because financial advisors are longer-term allocators and stuff. I don't know.
Yeah,
it's been part of my thesis
I just
on
think
ETH
that
BTC.
ETH is going to be a healthy part of any crypto portfolio. A 5% allocation, a 10% allocation in crypto,
or higher,
or higher.
Right.
And so, as more and more people get exposed to the idea that I need crypto in my portfolio, I need crypto in my portfolio because it's a risk diversifier and a performance enhancer. It's tough to ignore ETH, especially once you get an ETF.
And it's meaningfully different from Bitcoin, so it's reasonable.
And so it's just like higher beta, lower market cap. And so I definitely, I see it both ways. Fundamentally, like I agree with the macro thesis behind Bitcoin more. And, and so I would obviously like to see Bitcoin outperform. But I think it's one of those things you just got to own both.
Yeah.
And in terms of alt exposure as well, right? Like I think there's just going to be so many new institutions that are interacting with crypto that are going to understand it better, and the education that goes on after. Like I think this is really like a seminal moment for Bitcoin, crossing of the Rubicon, however you want to think about it. But from this point forward, the world will be different.
Okay, before we break, CPI is tomorrow and Thursday, again, January 11th. What are you thinking about? What are you expecting for CPI?
Yeah, I want to see, it does matter because there's a lot baked into markets in terms of interest rate cut expectations that are priced out to this year. And so I think the risks to the number are, asymmetric in the sense that if it comes in higher than expected, that some of this market pricing might fade. But in terms of
goes later, the cuts go later in the year, or like less magnitude,
less magnitude, but both.
Yeah,
and it's tough to price in more cuts, in my opinion. Therefore, like a softer CPI print is not really going to do too much for markets. But high level, what I'm looking at is like owner's equivalent rent. We've been expecting it to come down meaningfully. Over the next handful of months as a function of more supply of apartments hitting the market, as a function of vacancy rates also ticking up. And just as, like the real-time indicators for rents have been ticking down versus the owner's equivalent rent metric has been a little bit stickier because of kind of how they calculate the numbers. So expecting a little bit more catch up there. And then in things like used autos, I'm thinking there's going to be some weakness, airline fares and, things alike. Should see some declines. But in terms of what I'm focused on in inflation, in terms of stuff that might alter people's views, is this freight issue right now with, all the conflicts we're having in the Red Sea and how much, in terms of freight supplies not getting delivered.
That's among the biggest risks for inflation, right?
That is a big risk.
The geopolitical supply chain stuff.
Supply chain stuff is huge. And then oil is trading really well, $73 a barrel on WTI crude. Gas prices have come off a lot off the highs. And so that's been a positive, sort of development. But again, like what I'm more worried about is the stock market's almost at the dead highs. Crypto's back to the dead highs. Property values with interest rates going down, are still relatively firm. And so I think the market is still under appreciating the risk of reinflation. But all of the indicators we're looking at in terms of manufacturing, sentiment surveys, employment data, like they're all pointing towards a slowdown in the economy and a slowdown in headline inflation and a slowdown in core PCE, the Fed's preferred measure. And so that's kind of why you're seeing all of these interest rate cuts priced in addition to the Fed taking a more dovish stance and a more precautionary stance. And so there are things that can counter that view, and a high CPI print is one of them. And so that's kind of what I'm focused on as a risk to the market.
More risk on a high print than a
correct.
low
And then
print.
the other sort of big development this week was the back and forth we've had on the Fed's balance sheet. So right now they're running off the Fed's balance sheet, right? But you're kind of getting to the point where you might want to consider stopping. In addition, it doesn't make sense to be tightening policy with the balance sheet and easing policy on interest rates.
Kind of negating yourself, right? It's
Correct.
not a unified front.
Correct. And so Lori Logan, who's the head of the Dallas Fed, who used to be a member of the New York Fed, which knows all the plumbing, came out on Friday being like, oh, it might be time to stop this quantitative tightening or taper it. And then Williams today was like, it might still be appropriate to engage in. So there's a little bit of a back and forth.
Yeah.
And then we just still have to deal with this ongoing fiscal over exuberance. I mean, the government spends just so much.
All right, we're gonna get to the government. Let's save it for another one. It's BIMNet. Thank you so much. It's an exciting time in this market.
I'm so excited, guys.
Truly an amazing.
Let's go.
We're excited. Well, that's it. BIMNet Abibi from Galaxy Trading. Thank you so much.
Pleasure.